Hey, welcome everybody. Welcome back. I'm your friend in success, Robert Morris, and welcome to the Rob Review, the show that we talk about not just investing, but how to invest like a CEO in the stock market. And what does that mean, investing like a CEO? Well, I think I need to do a whole show on that, but just to kind of give you a brief overview for those of you that are new and even some returning, because this show has changed over the years as I've done it because my mindset has changed, right? What do CEOs do that everyone else doesn't? Well, when you look at, and I've read a lot of books by people that started businesses and then hired CEOs or became the CEOs of their companies. They're the CEO and founder, or hired CEOs that just have super success. There's a total difference in their mindset than the people that they hire that work for them, that help them have their success in a company. See, the CEO, the way that I read and understand, is that their mind never stops thinking about how to advance that company. They don't have to think about how everything happens. You know, that's why they have the team they have. That's why from the janitor all the way up, things run smoothly, because each person has their place. But the CEO puts it all together. The CEO has the plan. And I see looking at the stock market from a CEO perspective as having your investment put together in a plan, like a business plan. And you put it together from, okay, where do I want to be? What do I want my investments to do? And just like a business, you want them to produce income later on. And where do I want to be in a year, 3 years, 5 years? You put together a business plan with projections. You do that with your investments. And when you do that and you start thinking about your investment from a perspective of they're my business, they're my vehicle to wealth, they're my way to freedom, it changes the perspective from just thinking like I'm going to use this money to retire, just thinking like I have an IRA and that's everything, and eventually I'm going to get it to a point where I'm going to feel comfortable living off of it. That's what all of us, including me, once upon a time, we're taught, and still today a lot, that's the purpose of the show, are taught to look at the stock market as a vehicle where it's mainly for retirement. Leave your money in it so it can cultivate other people's wealth, because that's really why they want you to leave it in there. And don't think about yourself as being a investment professional. Just give your money to the professional, the money manager, the advisor, so they can do it for you. Well, it's not that those people don't have a place. I have a financial advisor. I have met with people that are fiduciaries of other people's money, and I love to speak with them about their mindset. Those people have a place, they have a purpose, but I believe when you come from a place of understanding where you want to go and having knowledge about the market as a CEO, you are better off for it. You can make better decisions. You can discern better. And so, with that intro, that long-winded intro, let's get into part 2, where we're talking about, again, $10,000 in dividend income monthly later on down the road. That's where I'm getting to. That's where I'm working towards. How are we going to get there? We laid the baseline, talked about some very specific stocks that pay really great dividends and how you can put them all together to have good dividends that total eventually $10,000 every quarter. And then you stack those quarters together, you stack those months together in a quarter to get a check every month of the quarter. Now, today what we want to talk about really quickly in the next 30 minutes, we got to break down the how-to of this thing. So we're going to go to slide 2 real quick. And what are we talking about? What are you going to learn? What are we going to break down? How to find solid buy points for dividend stocks and stocks in general. How to use covered calls to create extra income and build up the dividends, build up the money that you have to buy more and stack the dividend. This is where the magic happens. This, like, I can't say this enough to really, I don't know how to set the stage for how powerful this strategy is, other than to say, this is like my bread and butter of the stock market. This is how You don't just buy stocks and hold them. This is how you begin to see how owning shares in a company can not only produce long-term benefits, but can produce short-term money that really stacked up. I mean, it is mind-blowing when you start to look at the numbers, guys. It's life-changing. You begin to see that you don't look at income linearly anymore. And so this is my bread and butter. I love, and I'm talking about this in a way that I hope will explain it, because honestly, a lot of people look at things like covered calls, put calls in general, just options, as very risky and not at all the way to produce regular money from the stock market. But I thankfully do not have a education in the stock market from terms of going to school to learn this stuff. I'm not a person that worked on Wall Street, and I think because of that, and because of the way that I learned it, I am able to not come at this from a standpoint of, all right, I'm starting in the ground, I can't do this because this is not the way it's done. I just look at it as if it worked, it worked. Bottom line, if it worked, it worked. And this worked. I mean, really. All right, so the three main points: how to find solid buy point and let them come to you. What does that entail? Well, that entails chart reading. Simply put, that's where it starts. The way I look at this, the way I look at finding stocks to buy. First of all, we already picked out some, so I'm going to use Cat Tractor as another example stock for this because I think this is great stock to use, and we're going to look at some charts here in a minute. But if we go to, let's see here. Let's go to slide 3. We will see that, okay, so you know that in order to find buy points, you can't just shoot in the dark. You've got to have something to judge by. You got to have somewhere to begin the basis of studying how to do this, and that comes from the chart. And so you start with figuring out which stocks move with what market. And so, for instance, Cat Tractor, I've already done the research, and I know that out of the big market, and what I mean by markets is the big indices like INDU, that's the Dow, the NASDAQ, $COMPQ, S&P, the Wilshire 5000. Those are basically the 4 big markets we have here in America. Or you can also include, and especially with Cat Tractor, the Russell 2000, which is big enough to be an index or an indice. Certain stock, not just because they are in those indices, but they just move. Certain stocks just move with certain indices, and you have to start with that basis. Or you can just listen to the Rob review and take what I'm doing and take it as your own easy out without having to do the work. Though the work does give you the confidence in being able to do this on your own, right? And so then you study candlestick patterns that are most commonly used for reversals with that particular stock, because I believe that when you look at charts, when you look at candlestick patterns, you see that every stock builds characteristics. And they all start to not only have similar candlestick patterns for reversals, but a lot of stocks, especially Cat Tractor, has regular reversals on certain patterns. And then you can plan your next entry. And so I'm going to go over here and go to my next set, and we're going to pull up some charts here. Oh, man. Maybe I need to put these sets closer together. Okay. So, now, this is the only time we're going to look at charts tonight. This is a chart of Cat Tractor. And the way I look at entering a stock is just like when I used to go quail hunting with my dad or go duck hunting with my friends. I look at it from a standpoint of when you come up on, if you've ever been hunting, bird hunting specifically, you got your dog out and you're walking up on a covey, and you go to flush that covey, you know it's there, you make a plan. You assert, I'm going to go this way and you're going to go that way. And when you pick out the bird flying from that covey, you don't shoot every bird. Pick one that you see as your best shot, and you aim and you take it and you hit the target. Now, if you miss the target, you don't get to shoot another bird because you probably don't have time. But most of the time, if you're fast enough on the draw and you get really good at pulling the trigger, on that same move, if you will, on that same covey flush, you can hit one, maybe two birds, right? Same thing with stocks. When you get good at entry, when you get good at watching these things, a market move can push you into not just one, but maybe multiple stocks that you wanted to own in the first place, right? Now, we talked about Cat Tractor and the Russell 2000 index. This is the examples I'm going to use. The Russell 2000 and Cat Tractor, they move really well together. Now, you can go any stock you want to, do your own research, and you take it back in time and you just judge based upon your chart. You write down dates where the index set up, declined, and found a bottom and set up a move upward. You write down the date and you go and you look and you see if it matches with your stock that you're trying to trade. I would use longer term chart, like weekly, monthly, and quarterly, but mainly monthly and weekly. And maybe if your system that you're using for your charts has a 3-day, because you're holding for a longer period, you want to use a longer period of time as in a chart to buy. Now, the chart itself here that we're looking at is a chart of when Russell 2000s, $RUT, has a series of movements this is basically over 2 years, all right? Not really a full 2 years, but starting with that first move there, you see that's in October. And then you got the second move is in May of last year, and then the third move is in October of this year. It's a really big, good move at the end of October there. And so those three moves are the basis for what I'm going to talk about with Cat Tractor. And so if we go now to our next chart here, this is a chart of Cat Tractor, and I realized that I got to step back here for you to be able to see these. So let's just pull that up full screen. You got 3 buy points here. Now these 3 buy points are not the same exact date, but every time the Russell index would set up a move, for instance, the first move there, that's October the 9th, when Russell set up the move on the last chart, that first move on Cat Tractor, 10/16, so not even a week after the Russell index set up that move, Cat Tractor agreed with it and said, I'm going to move with it. Same thing, May, at the end of May, it set up a move, Cat Tractor again. October, as you see that last move there, at the end of October, you see the decline happening there. You see the dojis on the candlestick. The decline is beginning to lose its momentum, and then it turns over and begins to go up. And now, when you look at a chart like that, and you've never seen candlestick charts before, that's overwhelming, and I get it. So you have to do some study with candlestick charts before you feel confident. But when you're buying long term like that, you're talking about holding the stock for 5 years, 10 years, maybe 20 years, maybe not much more than that, but 5 to 20 years. You have the luxury of not being right now, as one of my teachers said. Right now is for immediate options, right? But when you're buying a stock to hold, a couple of candles go in your direction before you're ready to buy, it gives you not certainty, but as much of a probability of the move going in your direction as you can. And then because you're buying with a market move, you end up owning the stock and having a profit already in your ownership of that stock. And it becomes a really nice thing to not just be like the masses, which is what we're trying to separate ourselves from, and buying after every Tom, Dick, and Harry that gives you advice. It changes. You don't have to just follow the crowd anymore. You have taken a little bit of time, learned some candlestick pattern knowledge, learned some chart reading, technical analysis ability. You can go read any book by Steve Neeson. He's a great guy to learn from. Or Martin Pring used to have a book out called Beginner's Guide to Technical Analysis, and that's all I've ever done. I'm not a technical analysis expert, and you don't have to be either. I have very basic technical analysis understanding, but I'm working to be a master at it. And that works for me. I've mastered those understandings of the turns and the patterns, of the setups, of the reversal patterns. And I can use those to profit. And so no longer do you have to go in and blind and buy just because the stock market had a huge sell-off and you're hearing everybody panicking, so you're selling, and then everybody's buying, and so you start buying. You end up finding yourself at, let's go to this next chart here, and then pull it up. Full screen. You're just looking at closer up look at that move. When you follow everybody else, where I've drawn that line there, that one, you're not buying at that bottom. You're panicking and still selling at that bottom. And when you're not then buying 2 or 3 candles later when the move is new. When you're following everybody else, you're buying when the candles are way up there on the top of the Bollinger Band. And if you don't have any technical analysis experience, that doesn't mean anything to you. I understand. But this is where it starts. Becoming a stock market CEO, if you're watching this show, that's what this is about. This is where it starts. Having the understanding to differentiate yourself from the masses and being able to go to the person that you might use as your investment advisor and saying, I'm looking at this chart of this stock. When are we going to buy it? Let's set up a plan, And it worked. It worked. And so that's all the charts I really have to show, because that's as deep as I want to get into technical analysis on this show right now. So I'm going to go back over to my next set here, and we're going to start talking about the other strategies that I told you I was going to work in tonight, all right? So covered call. This is where the rubber meets the road, ladies and gents. This is where, when you understand that enough that you don't feel like it's a huge risk, that you feel more comfortable with using the strategy, this is where there's 3 or 4 methods that you can use to produce regular income based upon trades that set up for a stock like Cat Tractor. And you don't have to wait every quarter of the month and the quarter for a dividend check. You can produce monthly dividend check. Plus, in the month the dividend check comes, you get 2. That's the difference. That's where that's where I really think that once you start using this stuff, once you've done your research and you start to tiptoe into understanding that, you will be so empowered that you will remove the bondage of not knowing how to use the stocks that you already own to benefit from financially, because you only know how to, up until now, the only way to make money, right, is if the stock had a dividend, or if you were going to sell the stock. And if you sell the stock, you got to pay the taxes on the profit from when you bought it to now before you get any money out of it. And so the capital gains eat you up. Here, the capital gains don't eat you up. You still own the stock, and you get to produce income, and you can use it as income, or you can use it as stackable cash till you're ready to buy more of the stock. So, covered call. You see up there, I'm talking about how Buffett churned out billions by sweeping up the change. This is a method, again, a lot of stuff I talk about on the show, all of it I use regularly, but none of it really is mine. It's not brand new ideas. Buffett, the Oracle of Omaha himself, how everybody talks about him being the investor. I get it. Smart guy. But if you've ever read a book about how Buffett uses the stock market, you may have seen this, you may have not. He has a term he calls sweeping the change. And sweeping the change is Buffett's form of using covered call. Sweeping the change is a thing where when you have a stock and the stock is sitting out there and it's trading, there has to be enough strike prices with prices on the bid and the ask out there, because there has to be, that I'm going to just get into it here and you'll see what I'm talking about. This is one simple I call it simple, and it really is. You'll see simple way of using covered calls to produce income from a stock. Now, how Warren Buffett compounded his wealth. Most people have never, ever learned this, and I think you shouldn't be allowed out of high school without being able to understand how to do this personally. Let's talk about Pepsi, friend. Pepsi, it's got a nice dividend, $1.75 a share, paying right now. Well, what if every month, maybe not even every month, let's say 6 times a year, Pepsi had a move where you own 500 shares, right? And you want to just benefit from owning your Pepsi. So you sell 5 contracts because every 100 shares of stock you own is equal to 1 options contract that you can utilize at some point in time. So as you build up your shares, until you have 100 shares, you can't do covered calls in this way. But once you do, you'll know how to use it. All right? You got your 5 contracts, your 500 shares. You sell 5 contracts of the 180 calls with Pepsi at 165. Okay? A stock like Pepsi doesn't move that much, but if it did, okay, I just did this today looking at options chart today for Pepsi. If I would have sold today the February 9th $180 calls, they would have given me 18 cents a share for every share I own. That's not a lot of money if you don't own but 300 or 400 shares. I get it. It's like $90, $100, something like that. But think about it. It's sweeping the chain, right? It's on the floor. It's there for you. Nobody else is going to take it. Why not pick it up and put it in your pocket? Wealth mindset. It's there. Pick it up, take it, right? Let's say you do that 12 times a year. Well, what if Pepsi doesn't move 12 times? Well, you don't have to have it move to benefit from this because you're selling so far out in time and selling so, like the stock's at 165. You're selling $15 above the current stock price. Pepsi might not get there. You're going to benefit from the stock not moving at all. You sold that call out there. You let it expire worthless. You get to keep the cash. If you did it 12 times a year, that adds up. Now, doesn't that sound like just a powerful way to just pick up some change, ladies and gentlemen? Powerful way. Now, we talked about in the last show how we're working towards owning about 8,000 shares, or I am, of each one of these companies. But what if you own 8,000 shares, 10,000 shares, 20,000? Now you're talking some serious coin. Now you're talking every time you do this, if you get 20 cents, it adds up to thousands of dollars. And if you do it 12 times a year or more, you're talking minimum 15, 16, 20 grand that you get to pocket extra outside of everything else you're doing. And you just can keep it. You can use it as income. Imagine $20,000 extra in income. And you only have to pay based upon current tax principles. And you're going to have to pay Uncle Sam. But for what I know, okay, of course, not a tax professional, but if you put aside 1/3 of all of it, it'll generally cover your tax. Not advice, go talk to your professional, but keep 2/3 of it, you still got a decent chunk of change there. And I just don't know why you wouldn't do it, okay? I just don't know why you wouldn't do it. Now, you take that money, what I would do with it, you set it aside and you wait to buy more shares of Pepsi when it's set up to move. All right, now, let's talk about how you can lose here. Now, you can have what happened as what's known as getting called out of the stock, okay? Now, let's think about it. You've got your Pepsi, you've sold the $180 call, you've gotten paid, and some strange thing happens and it moves up enough to where you do get called out of the stock. I mean, you've got to sell all your Pepsi right then. Oh no, but you get to sell it for $15 a share more than what you had in it. You get that money times the however many shares you own. I mean, that's a decent chunk of change, guys. And now you've lost your Pepsi, but what's going to happen? It's going to come back down if it goes up that much at some point. Now you can go in and buy more than you had in the first place. And you've benefited from churning and burning those covered calls. I think that's a really powerful method. And I think we got 2 more methods to talk about, but I'm running out of time for this episode. So what I'm going to do is I'm going to continue on with another part here. I didn't plan this, so I'm going to let Lee get the ending ready. And I'm just going to close with saying I'm throwing a lot out. And I don't really talk a lot in depth on this show about all these strategies, but I think that needs to change. I'm going to start doing that because this isn't advice. This is just me talking to you one-on-one across the table, what I'm doing with my money to help you. There are plenty of you out there that have over time accumulated thousands of shares in companies. What if from the beginning of you owning your first 100 shares, you started to do this? See, you can't turn back the clock, but you can teach your kids. I know personally, family members of mine that have passed away with strong portfolio, right? But they didn't do anything with that portfolio their entire life. They just owned the stock. And there's nothing wrong with that. They got dividend. But what if they knew how to do this? It's not like you have to go out and work with your bare hands and do it. It's a click of a mouse, a phone call. If you want to use a broker, phone call. I'm just saying, if it's good enough for Buffett, it's good enough for me. Sweeping the change. Now, on the next episode, we're going to talk about 2 more strategies for covered calls. We'll go a little bit in depth there. And then that's pretty much all I've got for you on how to really churn everything you can everything you can out of a stock with some basic strategies that, in my opinion, everybody should know. You shouldn't be able to leave high school without knowing how to do this. All right. I'm your friend of success, Robert Morris. I'll see y'all on the next one. Have a great night, everybody.
The views and opinions expressed in this program or any other Rob Review program are not to be considered financial advice, and all these strategies have their own inherent risk. If you act on information given in this show, you are doing so at your own financial risk. Map. Productions does not take part in your positive or negative financial results. That is why I recommend you consult your financial advisor before acting on any of these tips. What worked for Robbie may not work for you exactly as shown in the show.